All right. Hello and welcome to Accounting for Managers here in the MBA program. Appreciate you all being here as always. And I appreciate your patience as we've had to switch over from Zoom to Teams. There, we're team Zoom is experiencing outages sporadically throughout the United States right now. So I imagine they'll get their issue resolved pretty quickly, but I wanted to be able to host this session regardless of what's happening with that situation. So I appreciate you all being able to pivot over to Teams. So as I mentioned, this session is being recorded, so I will post it to the classroom as I normally do. And so I wanted to bring you all together just to briefly talk about week 6 or unit 6 in the course. You're going to notice several differences for this week specifically. And one of the first things you're going to notice, after you go through all the awesome stuff, is when you get to the assignment for this week's assignment or this unit's assignment, you're going to notice, yeah, there's a little bit more work involved here. There's 6 tasks to work your way through, but you'll also notice that hey, there's no Excel file for this week. That's done intentionally. There's no Excel file because instead of your normal writing a executive summary, you're actually going to be doing a little bit more of a comprehensive report. And so with a comprehensive report, you're going to be writing about these 6 tasks in your comprehensive report. In addition to that report, your second deliverable for this week is a PowerPoint presentation. And this could be a draft or outline format, sure, no problem. But if you could make it a little bit more than that, that'd be great. Now, the reason why we have pivoted in week 6 to this type of format with a comprehensive report and a PowerPoint presentation is because at the end of the course in week 8, there's a comprehensive assignment. And in that comprehensive assignment, there's a comprehensive Excel file, a comprehensive report, and a PowerPoint presentation. And so I wanted to help you to become familiarized with with those elements. And so that's why in Unit 6, we don't have the Excel file. We do, however, have a comprehensive report and a PowerPoint presentation as your deliverables. So take your time working through this, but I wanted to point that out first and foremost. And now that I pointed that out, I'd like to jump into a PowerPoint presentation that I created for this week. And this PowerPoint presentation covers a lot of the elements that you're going to cover in your report and in your presentation. So let me go ahead and move forward. So we're going to roll through those 6 tasks together, and I'm going to talk very briefly about each task and what it is that we're looking for you to be able to do. Now, I'll also say that this week is going to require a lot more external research on your selected company. And the reason for that is because some of these tasks that you see here are not going to be inherently evident in your 10K report. There's going to be some things will be evident, sure, definitely, but not everything. Um, and so with that, I'm going to provide you with some additional resources to look at, and I'm going to provide you with some recommendations to be able to do some research outside of the 10K report for your company. And that'll involve things like going to the investor relations page for the company and also going to websites like MSN Money or Yahoo Finance or maybe some other databases and you can even include, artificial intelligence in that space. So, but regardless of what resources you do use, make sure that you are able to cite and reference them, because ultimately we do need to know where you got the data from. Yep. So in other words, this week involves a little bit more research outside of the 10K report. So just be aware of that. So we're going to roll through things like investment proposals using the discounted cash flow model, key performance indicators for manufacturing companies, M&A target evaluations. Now this one's pretty cool, and it's very entertaining because I love M&As. I think that they're a riot, right? So um, it's a lot of fun, the mergers and acquisitions, and not all of your companies do mergers and acquisitions, and not all of them have done mergers and acquisitions, but a good amount of them have. And so you'll use a combination of both the 10K report, where they do discuss mergers and acquisitions, and any type of external research that you find. And there are none. If there are none, document that. If there are, awesome, talk about it. That's what's going to make this week a little bit more entertaining. We'll also look at how the company is developing strategic alternatives for business growth and sustainability. We'll also take a look at any stock buybacks that the company's been engaged in, and what the impact is on their overall stock performance. And we'll also take a look at how how the company is communicating financial performance to their shareholders and stakeholders. So the first task in this week's assignment has to do with the discounted cash flow model, and how the discounted cash flow model is used to evaluate potential investments. Now, companies tend to use the discounted cash flow model to interpret what ultimately the payback is going to be with any potential investment that the company is looking to make. And so in this, you'll be looking at things like the net present value, the internal rate of return, which is not always inherently reported on the 10K statement itself. So when you look at net present value and IRR calculations, you're probably going to look at like MSN Money or Yahoo Finance, or some type of other external method of looking at that. The other stuff you will be able to find on the 10K report within this cash statement of cash flows, and the management discussion and analysis section, and also the risk factors section of the reports. So there's going to be some communication for your company within the 10K report under the management discussion and analysis section, because that is most commonly where management talks about future plans for the business, capital projects that the business is engaged in. Sorry, just hold on a sec. The capital investments that the company is engaged in, strategic initiatives, etc. So that is a great section for you to look at when it comes to looking at how the company is using something like discounted cash flow for potential investments that the company is looking at. Now, obviously, the company's not going to disclose like potential M&A targets or potential investments that they might make. The reason why they don't discuss that is because it's publicly made available information, and obviously we don't want to disclose information to the public based off of what the company's strategic moves are going to be, right? So, so you'll do some digging in addition to the 10K report. So that'll be for the first task. Let me see, just a sec here. Okay, so when it comes to extracting data for the discounted cash flow model, the first step we want to engage in is to identify the proposed investment by looking at the 10K management discussion analysis section or any type of hypotheticals that you might come across in doing your research on your company. So if you're looking at the investor relations page for the company, you're looking at, internet searches, uh, AI searches, etc. When it comes to any type of potential investment or proposed investments for your company. So the first thing we want to do is identify what the potential investment is that the company's looking to invest in. And there's a couple of different reasons why a company invests. They want to expand, grow a new product line, etc. Invest in more in R&D, that type of stuff. Uh, it's very common to find on your company's 10K report in the financials when you calculate out the what am I trying to say here? The Why am I drawing a blank on this one? But when you're trying to calculate out the capital investment, um, typically you're going to find something like that in retained earnings, notes to retained earnings, um, and in any type of earnings that the company decides that, hey, they're going to set this aside for future capital investments. You'll also typically find that the company will have a budget for capital investments, and so it's going to take some digging. Is what I'm trying to say. So the first thing is to identify any type of proposed investment that the company has, or any type of hypothetical investment that the company is considering, and that you'll be able to find that in both the 10K and or the investor relations page for the company, and of course through your internet and AI searches. So that's the first step. The second step is then to estimate future cash inflows and outflows based off of the historical trends. So as you're looking at the statement of cash flows for the company, you really want to kind of do a deep dive in the investing section, investing activities of the company. So a statement of cash flows, hopefully you already know this, but statement of cash flows has three different categories: operating activities, investing activities, and financing activities. Operating activities is the cash used for the day-to-day operations of the business. Cash coming in from customer sales, cash going out for paying the bills, paying the employees, etc. Operating activities, right? So day-to-day operations of the business, that's the operating activities part of the statement of cash flows. The investing activities on the statement of cash flows, that's, as the name implies, investing into the company. So that's cash going out of the business for the purchase of property, plant, and equipment, and cash coming in from operating activities from the sale of property, plant, and equipment. So when you look at the operating activities on the statement of cash flows for your company in the 10K report, you're going to see that investing activities, and that is going to give you an awesome idea of what the company's been up to when it comes to investing, their investing activities, right? And so take a look in that area. Take a look at the notes to the financial statements for the statement of cash flows in the investing activities, and that's going to give you an awesome idea of what's really going on, because it tells us about expansions. It tells us about investment into the company for expansion purposes. There's really no reason why a company will just purchase a brand new facility and keep their existing facility other than the point of expansion. So So dive deep in the statement of cash flows and the investing activities for step 2. Then for step 3, we can get a determination of the discount rate. The discount rate for calculating the discounted cash flow model is not always given to us. This can be an estimate. You'll probably be able to find it within the 10K report and the notes to the financial statements. However, sometimes not. So if you can't find it, it's fine, because we can then use other ways to go about finding it. Okay, so we can use the weighted average cost of capital model, also known as the WACC. If the disclosures in the management discussion and analysis comes from the debt to equity information. If the information is not provided, then we can just use industry averages to approximate the equity and debt from the notes to the financial statements. And when we do that, we can then calculate the discounted cash flow model. And of course, you'll learn a little bit more about that when you go through your learning materials for this week. And so when we calculate the discounted cash flow model or the weighted average cost of capital, and then when we're looking at net present value and the internal rate of return, these really give us some good ideas about, how the company's looking at certain projects and if they're going to invest in them or not. Anytime that you see that the net present value is going to be positive, there's a very high likelihood that the company would accept a project or an investment. If the internal rate of return is greater than the cost of capital, this is a pretty good thing, and it typically is an indicator that management would be willing to make an investment into additional property, plant, and equipment to grow the business. And so, again, those might not be very inherent or obvious in your 10K report. So you'll have to do a little bit of research outside of the 10K report to find some of this information. And that could be the investor relations page for the company, or it could be MSN Money, Yahoo Finance, etc. When it comes to your report, we want to, kind of summarize what your opinion is with respect to these key indicators. If the company is planning to make investments into property, plant, and equipment, as you're going through the discount cash flow model, and think about what is written in the management discussion and analysis section of the 10K report, and how does that align with the company's strategic goals, and what are the risks involved with the company making such investment? We could look at market risks that are located within the risk factors section of the 10K report. So really doing this type of exploration into understanding if the company's planning on making future investments, what those investments are, what they look like, and just running some computations to kind of validate whether the company is planning to expand or not. So that's the overall purpose to that first task. Let's see. Moving into task 2, the objective here is to calculate and interpret the KPIs. KPIs are key performance indicators, as you know, and these key performance indicators include things like the gross profit margin, inventory turnover ratio, and the operating cash flow ratio. These are really great indicators that help to determine the company's overall performance when it comes to their ability to invest in themselves to grow the business. That's at least how I look at these three KPIs. Because they're very specific to manufacturing, and because they're specific to manufacturing, they really are great indicators when it comes to understanding the company's ability to invest in itself for future growth. When we look at these formulas in the 10K data, this is the formula and where you can find it. So the first one is the gross profit margin. In this, we're going to take revenue minus cost of goods sold, and then we'll divide that amount by total revenue. So I apologize. There should be like parentheses here. So open parenthesis, revenue minus cost of goods sold, close parenthesis, divided by revenue. So in other words, you want to do this top part first. So revenue minus cost of goods sold first, then take that amount and divide by total revenue, and that's going to give us our gross profit margin. Now, your company might call revenue something else. It might call it sales. It might call it income. I don't know. Right? It's that top part of the income statement, right? So that's where you'll find your revenue. Your cost of goods sold is your cost of goods sold, or cost of sales is sometimes what it's called. And both those items are found on your income statement. That'll help you to calculate the gross profit margin. The second calculation you should make is called the inventory turnover ratio. And we find this by taking the cost of goods sold, or cost of sales, and dividing by average inventory. Now, here's the thing. Your cost of goods sold is going to be from your income statement, and your inventory is going to be from your balance sheet. When we talk about the word average in accounting, we're referring to the beginning balance plus the ending balance divided by 2. Now, remember, your beginning balance is the same as your ending balance from the prior year. Your beginning balance is the same as your ending balance from the prior year. So beginning balance plus ending balance divided by 2. That's going to get you your average inventory. So cost of goods sold divided by average inventory gets you your inventory turnover ratio. Excellent indicator to calculate, because it indicates efficiency, right? Efficiency in turning over the inventory. You know, how efficient they are at selling through inventory. Yeah. The third ratio to calculate is called the operating cash flow ratio. And the way that we calculate this is we take the operating net, I'm sorry, let's just say net operating cash flow divided by current liabilities. Now here's on your statement of cash flows, at the top section of the statement of cash flow is going to be your operating activities. And at the very bottom of your operating activities, you should see a line item that says net operating cash flow. And that's the amount that we want to use for this, okay? So it should say net operating cash flow, last line item under operating cash flows section of your 10K report on statement of cash flows. The last item on there should say net operating cash flow. That's the amount we want to use. And then we're going to divide that by the current liabilities, or total current liabilities. And of course, your total current liabilities is going to be on your balance sheet. And that should be, toward the top of your liabilities section. Now remember, current liabilities, the word current means 12 months or less. So that's why we call them current. And so that formula is going to give you your operating cash flow, which is indicative of the company's ability to meet its short-term obligations. And so looking at a little bit closer of an analysis, oh yeah, I forgot I had written that part. So a lot of this is going to be discussed in the management discussion and analysis section of your 10K report for your company. It provides an explanation for the margins, fluctuations, and changes in inventory policy. Right? That's one of the biggest takeaways from this. I would also recommend, if you get a chance, is to also look at your industry competitors. Um, because ultimately we want to be able to take these ratios that you calculated, gross profit margin, inventory turnover, operating cash flow ratio, and compare them. And how do we compare them? We can compare them to the industry, because you can get the industry averages, no problem. Just go to MSN Money or Yahoo Finance, or somewhere, and get those industry averages. It's pretty simple. If you go to Google, or whatever preferred search engine, gross profit margin, uh, industry average for, and then whatever industry your company's in, right? And it should give you some results. Uh, you know, my recommendation for that is, I would definitely use MSN Money or Yahoo Finance for those industry performances or industry metrics for comparison. That's probably going to be really your best bet. Uh, when it comes to your your peers, your competitors, I would look at their 10K reports. So figure out who your competitor is, one or two. Look at their 10K reports, if they're available. You could also look at, the, by typing in their name, your competitors' names, into MSN Money or Yahoo Finance. You should be able to find quite a bit of this as well. So just some food for thought. But ideally, we want to take your gross profit margin, inventory turnover ratio, and operating cash flow ratio that you've calculated, and compare them to the industry, to your peers, and year-to-year performance. Helps to identify trends, right? That's why we go through this process. We're benchmarking the company's performance, and also interpreting the results based off of the trend analysis. So that'll be for the second task of this project. The third task for the project, in this, we're looking at any potential mergers and acquisition targets that the company might be considering. And we're going to do that by analyzing the company's financial health through additional ratio analysis. Now, to do this, we're going to be looking at your selected company and calculating a couple of key ratios. You're going to want to calculate the current ratio, which is current assets divided by current liabilities, the quick ratio, which is a few current assets, not all of them, divided by current liabilities, the profitability ratio, return on assets, and return on equity, and your leverage ratios, debt to equity and interest coverage. If you calculate these ratios, it'll certainly help you to understand if the company has the ability to make any mergers and acquisitions in the first place. But also, if you run these ratios on the competitors of your company, it could determine if that company would be a potential merger and acquisition target. So those are the best ratios to run as you're determining whether the company has the ability to make an M&A, and if the competitor would be a good M&A target. Now, I would also look very closely at your company's trends over time, and potential mergers and acquisition targets trends over time. When it comes to looking at the company's balance sheet, we're looking for liquidity, current assets, current liabilities, etc. On the income statement, we're looking for profitability measurements like net income and the revenue, profit margin, etc. When it comes to the statement of cash flows, we're looking at the operating cash flows and if the company has ability for interest coverage ratio and other credit metrics, and then any other detail information that would help us to better understand the overall structure of the company. And a lot of that would be found in the footnotes or the notes to the financial statements and the management discussion and analysis section of your company's 10K report. And in there, you'll see things like debt structure details, interest rates, management commentary, and of course, the capital structure. When it comes to capital structure, and I'm sure you're already aware of this, but capital structure means that what percentage of the company is equity and what percentage of the company is debt. And so that gives us a really good idea of the overall company's health when it comes to their ability to make M&A decisions. Now, just a couple of things to think about when it comes to mergers and acquisitions and suitability is that it's really the green and red flags that we look for. Green flags are great. That means we're doing well in terms of the company's health and also the company's ability to make M&A decisions. And then, of course, we have the red flags, and then you should be able to make some recommendations based off of these. So, when it comes to the green flags, yeah, having consistent profitability and stability in their cash flows, yeah, that's super critical to the company's ability to move forward. If the company has reasonable debt levels and strong coverage ratios, that's really good. That typically means that the company has some flexibility when it comes to how their overall debt to equity structure is, and it also gives them good indication whether they have the ability to make an M&A decision. Red flags to watch out for: deteriorating profit margins, a decline in revenue, higher leverages, meaning their liabilities higher than maybe the industry averages. Other dedicated obligations that you notice in the notes to the financial statements. Those are typically red flags. So when you're working through task 3, one of the things you should come up with is a recommendation. Should this recommendation should align with the company's strategic objectives. And you'll be able to see a lot of that in the management discussion and analysis section of the 10K report, but you'll also be able to see that as well in the investor relations page, investor relations webpage for your company. For this, I would say that ratio analysis is an excellent starting point. And then, of course, doing further due diligence and reading through the management discussion and analysis section. It's going to be really helpful for you in task 3. In task 4, in this, we're looking at the leveraging information from the 10K report when it comes to growth strategies of the company. And so in this, we're going to be looking at things like market expansion, product and production diversification, operational efficiencies, and sustainability initiatives that the company is working on. The management discussion and analysis section oftentimes includes discussions about future expansions, research and development, and new products. You can use these as clues, right, for and suggest some strategic alternatives. It's also important to look at the risk factors and forward-looking statements in the 10K report. These oftentimes reveal potential challenges and opportunities for the company. When it comes to evaluating strategic alternatives and looking at the 10K report, I like to look at the business overview and management discussion analysis sections for current strategies and expansion plans. I would also strongly encourage you to look at the financial statements for the cost structure and available resources. Uh, looking at the, what am I trying to say here? Looking at the potential return on investment, funding requirements, and alignment with long-term goals, as are stated in the 10K report, is going to help you through this. I would encourage you to look at the outlook and future plans sections in the management discussion and analysis section in the 10K report for what management's thoughts are when it comes to their strategy and plans for growth. The approach that I recommend that you take in this is a SWOT analysis. You could get a lot of information from management discussion analysis and create your own SWOT analysis for the company. Or if you could find the SWOT analysis for the company, that's even better. But oftentimes it's not publicly available, so you can kind of create your own SWOT analysis for the company. Do a cost benefit analysis. You can do this based off of historical capital expenditures and operating trends. If you can find the capital expenditures part of their budgeting process, that's really where we're going to find. If you're on a capital expenditures ratio, that'll be helpful as well. And then also do a risk assessment on the company. Look at the market risk, financial risk, operating risk, anything that's disclosed. And those disclosures are, of course, going to be made in the notes to the financial statements and the management discussion analysis sections of the 10K report. That'll be extremely helpful for you when in looking at these strategic alternatives. The fifth task for this project is to understand the reasons behind the company's stock repurchases and their effects on key metrics. Now, when a company is engaged in a stock repurchase, these are oftentimes called share repurchase programs. They're also called, and why am I drawing a blank? They're also very typically called treasury stock. So if you search for treasury stock on your 10K report, that is the amount of stock that the company has repurchased. We call it treasury stock. So if you look at it'll probably be on the balance sheet. On the balance sheet under equity, if you see treasury stock as one of your line items, that is the company engaging in stock repurchasing. So look for treasury stock. Do it. Control F on your 10K report for treasury stock, and you might be able to find something. You might not be able to. Not every company engages in stock repurchases, but the majority of them do. So we look at the motives as to why companies do engage in stock repurchase programs. Why do they do it? If management thinks that the stock is being undervalued, the way to raise the stock price is to have less of it available, right? Simple supply and demand. So if you purchase back your own stock, less of it's going to be available, and it's going to raise the stock price. The other reason why the company might engage in a stock repurchase program is to boost other metrics within the company, like earnings per share and return on equity. These types of metrics help to motivate new investment. And of course, we have returning excess cash to the shareholders through what we call dividends. So these are very common motivations behind stock repurchase programs that your company may or may not be engaged in. So where do we look for these types of impacts from stock repurchase programs? The financial statements, you'll see changes in shares outstanding, total equity, and retained earnings. Your retained earnings statement will show these types of activities. You'll also see them on the balance sheet through treasury stock. And of course, you'll see them in the management discussion and analysis section of your report. Within the management discussion and analysis section, this is typically where management justifies any stock repurchase programs and the expected impact from them. The effects, of course, from a stock repurchase program is a boost in the earnings per share because, as I had mentioned, when there's less of it available on the exchange, the higher the price per shares typically is, right? This goes back to what you remember from economics. When there's less of something available, what is available is the price is higher. Yeah, that's EPS. The book value per share might decrease if buybacks occur above the book value. This is what we call putting a premium on a purchase. So if we put a premium on a stock repurchase, this has an impact on the book value per share. And then we have financial leverage, of course. If buybacks are financed by debt, which sometimes they are, company will go take out a loan from the bank in order to repurchase their own shares of stock. The debt to equity ratio may also increase. So these are the effects from stock repurchase programs. So I would encourage you to look for these stock buybacks or repurchases. They can be positive if the company has excess cash, but they could be risky if they don't, and it could compromise liquidity or strategic investments if the company doesn't have enough cash, right? Or if they use too much of it for these repurchases. You should also know how management explains the rationale in the management discussion analysis and weigh that against the actual performance outcomes. That'll help you with task 5. Task 6. Task 6, we want to use the 10K report to prepare your summary of the company's financial health for the stakeholders. And of course, your stakeholders are the individuals involved in the company. We learned about this back in week 1. I don't know if you remember that, but one of the I think it was the very first task. I had you identifying who the stakeholders are in the company. And these would include people like the investors, creditors, management, etc. These are your typical stakeholders of a company. And I want you to really understand what the company's financial health for our stakeholders really mean. That's the biggest purpose behind this. So, and looking at your 10K report, look at this in an easy to understand presentation. Think about how we communicate to our stakeholders. That's how I want you to roll with your presentation. Think about who the reader is. Write for the external user. As you write for the external user, both in your paper and in your presentation, that'll go over really well. So don't compose this like it's for you internally. Right? Like it's external. Okay. We want somebody who doesn't understand this to be able to understand it. So in that, I want you to communicate very clearly. Be very, very transparent. Reference. Where did you find the information? Use citations, use your references. Look at the footnotes, use the footnotes for clarification and adjustment, etc. Uh, Identify what the key metrics are. The company may not just come out and say, hey, these are our key metrics. Identify what they are. Sales, net income, cash flows, debt levels. These are all very common key metrics. The company might say what the company's key metrics are for them. But you'll be able to find this in the 10K report. Use visuals for in your report, definitely in your presentation. Use visuals, trend charts, bar graphs, etc. Use visuals. One of the biggest things that I've learned in my life is that anytime I communicate somebody about their financials and they don't understand finance or accounting, I show them graphically. They know what graphs are. They know how to read those. They may not know how to read a financial statement, but they definitely understand graphs and charts, right? So be creative when it comes to your visuals. As you're writing, summarize the major changes and trends that you find in the management discussion and analysis section. And provide recommendations for the stakeholders. These are the best recommendations I give you as you're working through these 6 steps. Look at those tasks. Keep in mind the 10K report for the data and insights, but also, don't be afraid to look outside the company. Look at the investor relations page for your company. Look at MSN Money, Yahoo Finance, any other resource that you find available. Do as much research as you can on this. Look at the analysis with respect to the ratios, the key performance indicators, discounted cash flow model, what the company strategies are, their buyback motives, how it's all tied in. Verify the information by going through the company's reports. Be effective in your communication and the findings. And you do all these things, this project is going to come together real well for you. Now, remember, the reason why we're doing this now in week 6 is because by the time we get to week 8, that's when you're putting together your final project, right? Your comprehensive assignment. So that's why I'm really encouraging you to do this. So read through the 10K carefully. Look at multiple years. Each 10K is 3 years of data. 2024, 2023, 2022. Except for of course, the saving the cash flows. That's only 2 years. But look at that. Look at the trends. Compare year to year. Those are my recommendations for success. So take a look through SEC 10K, investor relations page, and all the other stuff. Okay, trust me, it's out there. You'll find really, really good stuff. Bringing us back to the classroom, just as a recap. So we don't have an Excel file, but we do have a comprehensive report that you're going to write and a PowerPoint presentation that you're going to create. PowerPoint presentation, I'm not looking for, ton of detail, but I want there to be enough detail for you to be able to go through these 6 tasks and be able to explain it to somebody who doesn't understand your company. Right? So that's the whole idea behind this week. So now that I've been talking to you all for a while, let's check the chat, see what's going on. Let's see. Oh, man, that's a good one. Yeah, you don't. Eric's question is fantastic. Thank you, Eric, for asking that question. Where do you get the financials on a privately held company? You don't. You can't. It's if it's privately held, it's not publicly available. So that would be a challenge. However, if you think that that privately held company does have some information that they self-publish, you could get it that way. So you could go to that company's website and maybe they got something there. Um, but yeah, they're not gonna have they don't get treated the same way that they would if they were public. Meaning, if it's privately held, they're not going to publish their financial statements. They don't have to, right? The only reason they do that is for investors. So if you're looking for private information for a company that's privately held, if they have an investor relations page, great. That's where you'll find it. If not, you're not going to find it anywhere else. That's an awesome question. I
How
would,
would you like
I
us
probably,
to,
I'm sorry, go ahead.
I'm sorry, how would you like us to handle the mergers and acquisitions section in task
Hmm.
3 without access to the target's financial information?
Yeah, use the competitors that are publicly held. So in other words, let's say your company is Ford. I'd be looking at General Motors, right? Or one that is publicly available.
It's basically the only one you can compare it to because all the other companies are small or irrelevant. But yeah, that's what I do.
You got it. That's exactly that's really the only way to do it. Is so for your M&As, look at a potential acquisition based off of the company's direct competitors that's publicly available.
Got it. Thank you.
Yeah, great question. Yeah, yeah, that's how I would approach that for sure. And I did like that comment. That was excellent. Yeah, it's because the publicly traded ones are comparable in size as well. Yeah, awesome. Any other comments, questions, concerns? Yeah. Assuming the PowerPoint we're creating here in week 6, what's going to be the build up for week 8? Yeah, great. So awesome question, Justin. So what I'd like to see is that this PowerPoint presentation, although it's really outline or draft overall, it is going to build up to week 8. Um, so you'll notice that some of the tasks that we've rolled through up here, we've kind of done before. At least from the ratio perspective, we've already calculated some of those ratios from in prior weeks. Um, we know what the financial statements look like. Uh, we can do a lot of that analysis, and you want to include a lot of that in your presentation because ultimately, by the time we do get to week 8, in the comprehensive is going to be kind of a compilation of the 8 weeks, right? And so that presentation should really be cumulative when we get by the time we get to week 8. So I hope that helps to answer your question.
For the Excel for week
Mhm.
8, because
Yep.
obviously just compiling 8 different Excels or 7 different Excels is not going to be so easy. Is there going to be a template that basically has openings for all the data over the course of the course?
Awesome question. Awesome question. This course as it stands, it doesn't have one for the comprehensive. I can probably try to create one. Uh, yeah, I could probably try to create a template for the comprehensive assignment when it comes to Excel. Because I'm pretty sure as of right now it doesn't have one.
Might keep us from having to quit our day jobs.
Be a
Yeah, no
lifesaver.
kidding. It's a lot of work for sure. Yeah, I can definitely try to create one. Cool. Awesome. Any other comments, questions, concerns? This week should be some fun at least because you'll be doing some research, yeah. So, great. Well, hey, again, thank you everyone for your patience in switching to this platform with the technology issue. I really do appreciate that, and appreciate your time today, and I appreciate you guys' consistency and doing this with me. I appreciate that because I know that it's all optional. I know a lot of professors don't do this type of thing. I put this presentation together pretty much yesterday, but I wanted to have something tangible for you to be able to explain what's going on. It's unusual for us to do this type of lecturing in a virtual environment for an online class. So, but hopefully you find it helpful. I mean, that's why I do it. I just want to make sure that y'all get something really good out of this course.
This is tremendously helpful and it's really appreciated.
Awesome. Thank you for saying that. I appreciate that.
Are you going to post the PowerPoint?
Absolutely. Yep. I'll post the PowerPoint along with the recording.
Great. This is great.
Awesome. Thank you. Thank you so much. Yeah, I appreciate all that. If you guys need anything in the meanwhile, please feel free to reach out to me. I'll be happy to help you out. Shoot me a quick email. I'm usually very fast to respond. If you need anything in the meanwhile, just reach out. I'm here for you. Okay. But once again, thank you all so much for your time. I sincerely appreciate it, and I hope you all enjoy the rest of your day. And I look forward to your awesome work and your research on your companies. So thanks again. Appreciate you all. Take care.
Thank you.
Thank you.
Thanks.
Bye-bye.
Bye.
Bye. Thanks.